Today, US markets get the jitters. Hello again, I'm Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. Overnight, the US markets took a dive on the back of high interest rates, with the S&P 500 and the Dow making their biggest daily declines since February the 8th. And technology stocks were at the centre of investors' concerns as they jettisoned more risky assets. Plus, investors were also worried about the impact of trade tensions on corporate profits and Hurricane Michael's landfall in Florida, adding to the uncertainty. By the way, if you value the content we produce, please do consider joining our Patreon program, where you can support our ability to continue to make great content. Here's the link. The US Treasury yield rose again in extensions of a trend over the last few weeks, which were fueled by solid US economic data that reinforced expectations of multiple interest rate hikes over the next 12 months. It ended at 3.17, down 1.58% on the day, while the 3-month Treasury was up 0.12% to 2.27. The volatility index, or the fear index, rose 7 points, or nearly 44%, to 22.96, going above 20 for the first time since April the 11th and hitting its highest close since April the 2nd. The Nasdaq ended at 7,422 and registered its biggest daily drop since June the 24th, 2016, hurt by technology stocks, which had their biggest one-day drop since August 2011. The S&P 100 ended the day down 3.41% to 1,239, nearly 5% off its recent September highs. And the Dow Jones Industrial Average fell 831 points, or 3.15%, to 25,598, a reversal from recent highs. It's primarily the cumulative effect of interest rate moves over the past 5 days and news reports about trade impacting companies. Gold, however, hardly moved, sitting at 1,198, almost flat on the day. The Aussie slid further against the US dollar and is currently sitting at 70.59. So expect more bad news from the local market today as uncertainty reigns supreme. It's too soon to tell if this is another blip or a more fundamental swing in confidence, but we think the higher US rates are the key. So expect more falls ahead. And a quick reminder that our next live stream Q&A session is scheduled for the 16th of October 2018 at 8 p.m. Sydney time. Here's a link to the reminder on YouTube. You can join the live chat then or send me questions beforehand. And by the way, if you value the content we produce, please do consider joining our Patreon program, where you can support our ability to continue to make great content. The links are in the comment below. As always, if you like what you've seen here today, please share and like the post and add a comment or question. I read them all. And if you haven't subscribed, please do so to receive future updates. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll talk to you again next time.